Hey, welcome to the Mortgage Minute for this week. So after the Bank of Canada came out in January saying that we really don't have enough heated economy, the economy's not doing well enough to justify rate increases, here's the Deputy Governor of the Bank of Canada coming out and saying the economy is set to rebound after a detour in 2018. Carolyn Wilkins suggesting that the Canadian economy is going to come back and it's going to do fine. Does that mean we're going to see further rate increases? Well, I doubt it. I really don't see that happening. That's my opinion. And I looked to the south and I see that the feds are saying, man, they're not going to be increasing rates at all. So again, the Fed is the U.S. equivalent of the Bank of Canada. When you look at the Fed saying we're not going to increase rates, just look back a year ago, the Fed was expecting 3 to 4 rate increases. They did that. Now they're cooling their heels. In the meantime, the Canadian mortgage industry is still being impacted by rules set out and put in place by OSFI, the Office of Superintendent of Financial Institutions. And here they're now saying we're going to take a further look at bank deposits. The bottom line, the real point of this article is not so much what they're going to do with bank deposits. It just means OSFI has this increasing feeling or need to get involved with the Canadian banking rules. Last week, they also suggested that they might want to apply the stress test to private mortgages, which I think is kind of insane because private mortgages are done on stated income and really it's illogical. Suffice to say, that's probably not going to happen. But what it does suggest is that we have this ongoing issues of concerns about the mortgage rules, the mortgage environment. Now, here's an article that talks about how the mortgage rules are affecting the gig economy. And this article caught my eye because it says, basically up to 20 to 30% of Canadians are part of the gig economy, meaning they don't have regular full-time jobs. And guess what? Banks don't like that, so that's getting tougher. It also talks about qualifying for a mortgage without a salary for self-employed individuals getting more challenging, et cetera, et cetera. So all this kind of leads to one concept that I'm going to be preaching here over the next few months, and that is mortgage rules are getting tougher, yes, but banks still need to make money. So there's going to be this clash between satisfying mortgage rules while still trying to get more money out the door. Look for the spring market starting in 1 month, March, April, and May. Look for banks to get very aggressive, creative products, discount on rates, for example, prime minus 1% or maybe even more. I'm expecting a lot of good mortgage products that might make it appealing to home buyers. And if you're looking to refinance or get into the market, the spring market is the time to take advantage of these good deals the banks will be coming out with. In the meantime, going to shift to talking about RSPs and TFSAs. It's RSP season. If you've just opened up your RSP report on your mutual funds or your stocks, I can guarantee you're not really happy with the Q4 results. It was a really tough time in the markets. However, here's an article talking about investing in alternative assets like student housing, and it mentions a company that we work with, which is Centurion REIT, Real Estate Investment Trust, and they invest into student housing. One of their other products is actually called a Real Estate Opportunity Trust, and we're going to be talking about that in the next little while coming up as we enter into RSP season. The Real Estate Opportunity Trust, it actually has a mortgage division that lends money to the REIT. It's quite interesting. Targets between 7 and 12%. If you'd like more information on this, we've actually created a confidential analysis. And this is a 6-page report that breaks down what a real estate opportunity trust is and how it might be a good fit for your RSP in this season. So if you'd like a copy of that, send me an email to peter@peterkinch.com and I'll pass that along. In the meantime, that's the Mortgage Minute for this week. Hope you have a fantastic week. Thanks.